Today we have with us a very special guest, S Raman, whole-time member of SEBI. Mr. Raman, thanks for sparing this time and speaking to ET now. I know one of your rarest appearances and giving television interviews. So to begin with, if I could ask you, we all know you're very instrumental in shaping up the new regulation which will be chipping in very soon, wherein listed companies in a span of 24 hours will have to make it public or intimate the exchanges when it comes to any of the default that they do. What and when was this decided by SEBI that this is what needs to be done, and what was the whole rationale of ensuring that 24 hours is the maximum time limit that could be given?
First disclaimer, I don't consider myself as the chief instrument or anything like that. I was part of a wonderful team here. I'll just give you the background as to how the thought germinated. See, in 2005, we had given some exemptions to banks under the S4 scheme approved by the RBI. We exempted them from the ICDR provisions in respect of preferential allotment as the pricing formula. Second one, we also exempted them from SCST regulations, takeover regulations, which actually prescribe that if you have 25% of a company, you acquire 25% in a listed company, you have to make another open offer for 26%. Rationale was correct, because if you you are already in a position where you are taking over a bad company, and for being forced to give an additional offer for 26% was not very rational. Even the pricing formula was not rational. If you look at one or two celebrated cases, without naming them, banks converted a lot of debt into equity at say around 65 rupees when the stock price was around 30 rupees. So the day the debt got converted into equity, of course, there was a huge amount of MTM losses for the bank. Recently we did in the month of April was, and rightly so, and here of course RBI was also in touch with us and banks also were representing. We are not here to run the bad industry. Even if we have taken over, we have to find somebody and then go on. But so the last 2 years, of course, NP has been a very naughty subject. It is engaging the attention of so many people all over the place, and we are also concerned. But while we were doing all this, a thought occurred to us as to why we are only dealing with sick companies or in very bad state, which they have already come into a bad state. How about doing something which will arrest future aggression of this type of accounts? So that is where the germination of thought occurred. And to us, for SEBI, one of the main instruments of regulation is the disclosure requirement. Disclosure is a wonderful thing. And one of the problems which was being faced with the banks was, for 90 days, of course, nobody would know. It's essentially information asymmetry. The company knows it has defaulted. The bank knows it has defaulted, but then the other banks do not know. Nobody else knows. And suppose you are investing in the equity of that firm because of some past good impressions about that company, you would be lured into it, but you would not know what is the latest position in that. So whether from the point of view of an investor, whether from the point of view of another banker, some bank accountant. So we said actually the best instrument to arrest the thing is to make a very simple disclosure move. Very simple in thought, very simple in concept, very simple to implement. Of course, SEBI is concerned only with the universe of the listed companies. But the listed companies, if you look at the overall corporate sector credit, it must be say 70–80%. So it is a big chunk of general asset size. So we thought the first person to know that he has defaulted is the company itself. I know if something is due, installment due is today, I know it is today. And if I have not paid, I know I have not paid. So what we said was, okay, declare it to the stock exchange. Once you declare it to stock exchange, what happens? The information is available in public across the board. No information asymmetry. Credit rating agency comes to know. Otherwise, earlier credit rating agencies were saying we were not given the information, so we were actually lagging behind the true run of events. And of course, the debate was what should be the time. You're saying next day, is it practical or something? We debated a lot up to what could be the time. 90 days is the NPA norms of the for any account to turn into NPA. But that is the RBS remit. We have nothing to do with that.
Mr. Raman, if I could just interrupt, interestingly, as you're rightly saying.
No, just one little point. Let me just complete. So we started off, okay, X days. And then again the debate was, why should it be X? And then if there is any default in the corporate bond market, there is a requirement to disclose it the next day. So we said, why have different standards for everything? Any default, whether it be bank or whether it be a corporate bond or whether it be any other instrument raised from anywhere else, if there is a default, please declare it in 24 hours. That is how that was
24-hour rationale came in.
Yeah, that was the rationale.
Mr. Raman, the other big which got implemented when under the department that you handled was collective investment schemes. We all know the kind of big crackdown SEBI as an institution did and the kind of impact it had across the country, where we are talking about lakhs of crores of rupees being collected under various Ponzi schemes. It is also now somewhere emerging clearly what SEBI has been saying then, that a lot of this Ponzi scheme ultimately also tried to launder money by pumping it into some listed companies in various forms. So clearly, if I could ask you, CIS as a whole, how has been the experience, and clearly is still a lot to be done when it comes to Ponzi schemes and the kind of monies that are getting raised in this country?
You see,
of course, Sahara always being a textbook case.
We have to have clarity while discussing CIS. I mean, even in your question, you mixed it up with money laundering and investment in some companies and all that. You know, that way, actually, clarity doesn't emerge. The point is this: there are basically two types of illegal fundraisings which SEBI is concerned with. You are mentioning about Ponzi. Ponzi, we have to be very sharp in defining what we are talking about.
Exactly.
Ponzi is something which we are not concerned with. Chit funds are something which we are not concerned with. Any amount in real estate, like maybe 1 or 2 days you have been hearing, we are not concerned with. See, what is CS, that is very important to know. I mean, the two types of fundraisings. One was the deemed public issue. We took up with the government. We said, no, this cannot happen. We have to have very definitive benchmark. So in the latest Companies Act, of course, that particular loophole has been removed. Any issuance of security to more than 200 people is a public placement, as a public issue. And when you are in a public issue, there are all attendant obligations that you have to issue a prospectus and so many other discipline things which come. So this was hugely prevalent, especially in Bengal and the other parts of Eastern India. We issued more than 200 orders on this. And now collective investment was a bit of a more difficult topic. The minute my main contribution was to bring clarity within SEBI itself, even outside there was a lot of lack of clarity. In fact, in terms of even judicial pronouncements, there was a case in which we go to a high court and high court doesn't removes the lid on them for raising more funds, and the problem gets compounded. But now overall, because of all this effort of 2 years, and within 3 years we issued more than 300 orders.
The commodities part, we all know a lot of things have happened in the last 1.5 years after the merger happened. A lot of reform steps have been taken, decisions have been taken, implementation has happened. The one thing that everyone is waiting and looking at is how soon could we see the seamless market getting implemented in that space with market participants or perhaps with the stock exchanges. How near are we seeing that?
I think it is a subject which is on top of our agenda. It's under constant discussion within SEBI, and I'm sure you will hear something not very far from now.
So say, for example, a BSE entering a commodity exchange or a single license broker regime, all this do we see, at least if I could say FY18 would be a realistic target where we see these things taking shape?
I'm leaving SEBI in 3 days. I can't actually give a time.
But you have worked a lot on all these things, sir. You have given it a shape.
That's not a fair thing. Yeah, I mean, I've done my bit in the area, but I can only tell you that when SEBI has to take a decision, it impacts huge number of factors, huge number of characters, huge number of organizations. So it is difficult for anyone to say, okay, this is the target date. But we always have some little things in mind, so which is not very right to say, okay, this is the date. Possible, but let's see.
Okay. So if I could ask you and touch upon the issue of corporate governance, You have passed so many orders. There have been various instances of violations at various levels, not specifically corporate governance, also corporate governance. If I could ask you, of course, now we all know the Uday Kotak committee is reviewing to see what best can be done. But how has been your experience being at SEBI when it comes to corporate governance? Lots needs to be done because the general feeling it's only being followed in letter and not in spirit, and that is where corporate India needs to think and do a lot.
You know, it's a bit of a easy comment to make. See, especially in high-profile cases, there is so much on the air, so many opinions being constantly bragged about. We are many things which are grey. It is not white and black. If it is white and black, anyone can say. And so, in many cases, you have got to wait for things to take shape. Okay, here is a transgression of a law or a regulation. Then we do take action. It's not as if we don't take action. But for a regulator to be a jumping jack and jump into things prematurely, it will only spoil things. So, corporate governance, we hold a lot of store for this. We examine what all the elements of a drama which have got played. And so, you know, and these are not very easy issues also. So it has to be deliberated in depth. One of the reasons why we have, the SEBI has appointed a committee under the chairmanship of Vijay Kotak. We have already had 6-7 meetings, very, very fruitful, very wonderful discussions are taking place there. Another 4 or 5 meetings are scheduled within the month of September. So we hope a lot of good recommendations will emanate out of that.
I know you will not be in a position to say the deliberations or how it would shape up, but clearly bringing in more accountability, that would be the key area that perhaps would be enhanced in the way the current regulations are and how the new will shape up.
Governance does mean sharp accountability, increased accountability. Yeah, of course, I agree with you there. I mean, that is the intention. And there are also things like, you know, promoters, whether a promoter should be given any information if he is not in the board. So the board is also, the committee is also very
It's serious. A grey area at this point of time?
Grey area in the sense.
Or we need more clarity in black and white?
No, you see, grey area in the sense there is something to be said for this, there is something to be said for that. But can we actually institutionalize the thing, saying, okay, if I am a promoter, but I am not a member of the board, I can get some information. And what is the type of information? The committee
that needs to be different.
The committee is looking into and also sharply trying to measure what are the types of information which can be shared, what point of time it can be shared, in what manner it can be shared, etc. So that, you know, this grey will become black and white.
Very interesting, Mr. Raman. So finally, if I could ask you, the other issue, I know it's still matter in pending and a lot of things have been said. You also dealt it at one point of a time, the whole controversy surrounding NSE and Algo trades. How are you looking at it? Perhaps it's one of the biggest challenge internally that SEBI faced off lately, and still it's a challenge to A, how do you tackle it, and B, how do you settle and close this issue?
Good. This again is now a portfolio not being looked after by me. I'm not conversant with the latest thinking. Oh, but well, I agree on a very general level of what you say. This has been a tough issue, but we are not hiding from it. I mean, we are handling it in a manner that it will lead to good outcomes. At the end of what SEBI manages to do, there will be a clear-cut signal to the market that if you do anything wrong, there is a big price to pay. That will be a signal which will be coming out at the end of the journey. I mean, these things take time. And for instance, it's an important thing for all of us to know that SEBI, anything we do is all appealable in the SAT or Supreme Court. So it's all, it has to be very measured and in terms of law, and it has to stand the test of the most rigorous legal scrutiny. This is a general point. But so far as that particular thing is concerned, I can only assure you that SEBI is working out at so many options At the end of it, I think you'll all agree with me when it happens. That is, here is a good signal which has been given by SEBI in a very powerful way.
I don't want to preempt anything. I'm only asking you this because we all know NSE is too big an institution, largest stock exchange of the country. They have already filed a consent with SEBI. Would that route be the best route, at least from the institutional point of view?
I do not want to make any specific comments on a specific case. I have told you what I have to say on that. The general society at large, the market at large, will be appreciative of the final conclusion of SEBI.
Just before my conclusion, since you deliberated and went in depth into FPIs, we all know P-notes as an instrument has been made redundant to a large extent now. The latest review also, whatever has happened. How do you see this? It's going to, we would see a natural death of it as an instrument, because at one point of time we all know how sensitive issue, but clearly now, as you say, after the reforms have taken place, the whole of FPIs, clearly P-notes, it's not a concern area when it comes to foreign investors.
We are making it as easy as possible for an FPI to get directly registered and directly handled. I mean, it is P-notes are essentially for people who don't want to come to the market and register themselves, but want to deal with Indian shares. See, I will take you back to where we decided that we will allot the job to registration itself to others. We decided, there are different types of investors, so we classified them as 1, 2, 3. So one is, government itself and central banks, etc. 2 is regulated institutions, and 3rd is everybody else. Right then, in 2014, when all this SIT and other things, they were not in the picture at all. At that point in time, we decided that category 3 FPIs will neither be allowed to subscribe nor to issue P-notes. So we did SEBI much before the SIT came into picture, or with their recommendations. The SIT came into being in 2014, and of course when recommendations started flowing a bit later. But much ahead of all that, we others had done a lot of tightening of the PNs. So 2 things, maybe P-notes may be on their way out, possible. There are some reasons why P-notes could be there, but then if nobody likes P-notes, it is nobody's case that it should be allowed to remain. But it is actually vanishing in importance, reducing in importance. It's only 6% in relation to the overall investment, as against some more than 50% at some point of time. So this is what I think. Actually, we handled it well, P-note aspect, much before the controversy surrounding the black money, etc.
Okay. Mr. Raman, once again, thanks a lot for sparing this time. Pleasure talking to you, sir. And we hope to have more interactions in your new avatar as a member of oversight panel of RBI.
Always.
Thanks a lot, sir.
Always. Thank you very much.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.